Now, we've also got another bit of pretty bad news for Carvana, which I've never been in on in the first place. But if you were, Carvana is down 20% or so in one day. They plunged because of some Gotham City research report that came out talking about an overstated $1 billion in earnings and that they hid related party transactions involving DriveTime, Bridgecrest, and GoFi. There's also a law firm securities investigation into potential improper disclosures with Carvana as well. So you can go to GothamCityResearch.com and read the full story here, but essentially they may have been propping up their revenue artificially through some alleged related party financial support. Also, there are accusations again of undisclosed debt and accounting irregularities, and a law firm is soliciting investors for class action litigation claims. They actually have a patchy history of high leverage restructuring and prior short seller scrutiny, which I never thought their business model in general, if you talk about literally what is like a giant vending machine of cars, does that really sound like a legitimate long-term business you want to be a part of? They might have had some high growth in their stock for a while, but to me, that just doesn't sound like a sustainable business model. Now, they've had some decent growth. I mean, if you look over the past year, their growth is pretty good. Over the past 5 years, it's actually less than it is over the past year, which is not always the best sign. PE ratio is pretty high. They are kind of a tech company, no dividend. You're looking for a lot of growth here. If you look at the past 6 months, they're still up 24%. It's not bad. The past month, they are down almost 4%, but they had a huge dip. Again, now it has gotten some people buying back in since this happened, but they went down like almost 20% in one day after this news came out about some shady things going on with Carvana. But again, in general, now even though their earnings were pretty good on their last few reports, I get they're trying to like disrupt the car buying process, and that's great. A lot of people hate dealing with car sales, but just the whole like vending machine car idea to me just sounds really shady. All of this patchy history coming up in these new reports it just doesn't surprise me at all. So I've always tried to kind of stay away from something like Carvana. I think transportation and car buying, all that stuff is kind of risky going forward anyway with the rise of robo-taxis. We may not even need personal vehicles that much longer in the future. It just depends on the growth of things like Waymo and Tesla robo-taxis. But if you look at something like that, I don't have any, there's no appeal to me to even look at something like Carvana. Now, of course, nothing in this video is financial advice. Please do your own research before you buy, hold, or sell any sort of investment.